In recent years, central banks around the world have been buying gold, and not just a little, at the fastest pace in half a century. Among them, China stands out. The People's Bank of China has quietly added hundreds of tons of gold to its reserves. Some say this is a sign of de-dollarization, that China and other nations are turning away from the US dollar. But is that really what's happening? A new study from the US Federal Reserve by economist Moritz Weiss takes a deep look at this trend, and his conclusions may surprise you.
Weiss's paper is called De-dollarization, Diversification, Exploring Central Bank Gold Purchases and the Dollar's Role in International Reserves. It asks a big question. When central banks buy gold, are they losing faith in the dollar, or are they simply diversifying their portfolios to manage risk? In other words, is this a political statement against the United States, or just a financial strategy to balance reserves? Weiss also examines whether the rising share of gold in global reserves actually threatens the dollar's dominance as the world's reserve currency. To answer these questions, Weiss combines several powerful data sources, including information from the International Monetary Fund and detailed reports from central banks themselves. He tracks how each country's reserve composition has changed over the last few decades. How much is held in gold, how much in dollars, euros, and other assets. Then he compares dozens of countries, from gold-heavy nations like China, Russia, and Turkey, to others that have stayed more dollar-focused.
Using cross-country regressions and time series analysis, he looks for patterns. When a country increases its gold reserves, does its dollar share go down? And does the timing of gold purchases line up with moments of geopolitical tension or financial uncertainty? Finally, he zooms in on the recent surge from 2022 to 2023, a period when central banks bought record amounts of gold, to see if this marks a genuine turning point in the global monetary system.
So what did Weiss find? First, the numbers show that the share of gold in global reserves has definitely increased, from about 12% in 2000 to roughly 17% by 2024. At the same time, the dollar's share has slipped modestly. But here's the interesting part. The rise in gold and the fall in the dollar aren't strongly connected. In most countries, buying gold doesn't necessarily mean selling dollars. Instead, central banks appear to be diversifying, not revolting against the dollar system. Gold serves as a hedge, a form of insurance against financial shocks, sanctions, or inflation. But the dollar remains the most liquid and trusted asset for global trade and investment. Weiss concludes that this global wave of gold buying is not clear evidence of de-dollarization, at least not yet. Still, there are some important exceptions, and China is one of them.
China's central bank has been steadily building its gold stockpile since around 2015, and in 2023, it accelerated those purchases dramatically. Officially, China now reports holding over 2,200 tons of gold, but some analysts believe the true figure is even higher. In Weiss's analysis, China is one of the few countries where the growth in gold reserves actually coincides with a visible decline in dollar holdings. That means China's behavior reflects at least a partial move away from the dollar, driven by a desire for strategic autonomy and to reduce exposure to US financial sanctions or market volatility. However, Weiss emphasizes that this is not full-scale de-dollarization. China still holds a very large portion of its reserves in US assets because they remain stable, safe, and deeply integrated into the global system. So, rather than rejecting the dollar, China seems to be rebalancing, using gold to gain flexibility and confidence in the yuan, while keeping one foot firmly in the existing dollar-based system. In short, the data tell a nuanced story. Yes, the world's central banks, led by China, are buying more gold, but that doesn't mean the dollar is dying. As Weiss puts it, recent gold accumulation reflects diversification, not de-dollarization. Gold's role as a store of value is rising, but its roles as a medium of exchange or unit of account remain limited.
For now, the US dollar still dominates international trade, debt markets, and reserve holdings. So while gold may be shining brighter than it has in years, it's not replacing the greenback anytime soon. For China, gold is both a hedge and a statement, a signal of independence, but also a reminder of how deeply interconnected the global financial system remains.
Thank you for watching, and what do you think? Is China's gold buying strategy a sign of the dollar's decline, or just smart risk management? Comment below.